Good day, everybody. It's Trent Klarenbach with the Klarenbach Special Crops Report. Today is December the 15th, 2025. Let's talk small green lentils. Now, we've been bearish small green lentils for, I don't know, it's been quite a while. Probably that 40-cent level, somewhere through there. And we talked about some different price levels, and I think when it was around the 35 cents, we talked about maybe 23, 24 cent level. My index is trading around that 21, 22 cent level right now, I believe. And yeah, it's looking nasty. But how much further can this market go? I think what we should do, and what we could do is, what I suggest you to do is maybe check back and check out some of these videos I did with David Nobbs. We talk about small green lentils in the August 22nd. Touched on them again here in the September 26th. Then you might find some more insight into the fundamental side of things as well as the technical. Let's take a look at my price charts. This is the monthly small green lentil chart using the Klarenbach Price Index for Saskatchewan. Each candle, these are candlestick charts. Each one of those lines, the red or the green, represents a candlestick. Represents the range of the prices throughout the month with the closing as well as the clothing and ending prices. So it's there's a lot of price data there. I like it better than the closing price because you just get some more information. You get a sense of how the price moved throughout the month or that time period. Yeah, here we are. We're trading at 21 and a half, 22 cents a pound is what my index is at. We have this yellow trend line going back to March of 2006, so 20 years ago. We tied it in with the 2019 low, and the price seems like it wants to test that level. Incidentally, that's sitting right around that 20 cent a pound range, 21 cents a pound. So the 20 cents is a psychologically important round number. It's going to bring in some buyers potentially, but if the price drops below that level, I anticipate an aggressive producer selling. That old adage that to buy grain, you lower the price, and I'm not sure if that's a strategy amongst the purchasers, but that's what happens. The price drops, we panic, we start selling, and that's what happens. Our fear sets in, and our emotions really drive our decision making. So this 20 cent level is very important to me. What if we lose it? Then we talked about 18 cents, we talked about 16 cents. 16 cents, I would argue, has been an important level in the past. 18 as well. So that 16 to 18 cent level could bring in some buyers and act as support. But once we break this trend line, it's just super, super negative, super, super bearish. So you will recall, and I mentioned this in those videos with David Nobbs, of a potential move down to 13 cents a pound. And how I arrived at that was I calculated a head and shoulders measured move. And I looked at this chart pattern up here and identified left shoulder head and the right shoulder. Calculated the measured move from the neckline, the break of the neckline. And yeah, we're down at this 13 cents a pound level. So it's possible. It's certainly possible. So you want to be aware of that. And that's a minimum price move. So if it gets down to that 13 cents, then it doesn't necessarily mean that it's going to act as a bottom. It might bring in some support at that level, some buying, but just be wary of that. So my next level is below 20 cents, 16 to 18 cents. And below 16, we talk 13. It's very important to how the price reacts to this 20 cent level. My name is Trent Klarenbach. It's sunny in Saskatoon. Life's good.